Welcome everyone to the fifth episode of season 2 of the RFC Tuesday podcast, the bi-monthly show on the web where we invite the best and the brightest in the financial services industry and try to learn from their successes and expertise. So tonight's episode is entitled Pressing Decisions During Depressing Times.
For everyone, we are the RFC accredited members of the IARFCPH, whose passion is to educate the public about the value and benefits of financial planning. The IARFCPH is an association dedicated to the craft of financing. The association is the sole organization authorized to conduct the RFC conversion courses, as well as continuing education in the field of financial consulting. And we are your hosts. I'm Andre Michael Abieres, a registered financial consultant and a stockbroker.
And I am Kuya Ryan, a registered financial consultant, chartered wealth manager, and registered estate planner. Joining us tonight, since there is a pressing need to talk about investments. Right now, we have a special co host, and we will be having him as co host from time to time. So, yung dating nasa background ngayon, nasa foreground na ulit, si Mr. Francis Canizares. But let me tell you more about why we are bringing him in on board. Let me give you a background of Francis. He has more than 5 years of trading experience with the Philippine Stock Exchange, and he is a registered financial consultant with cum laude standing. He also holds the record for the fastest submission of a financial plan by an RFC conversion course participant. 2 weeks lang po, mga kaibigan. That's very fast. Siguro hindi siya natulog. So he is also a financial planning assistant from an Australian business firm, and he is an aspiring market technician and equity salesman. So welcome on board, Francis. Nice to have you back again.
Hi, Sir Ryan, Andre. Good evening. Good evening to our fellow
Evening.
viewers. Yep.
So good evening nga pala mga viewers natin. Thank you for being with us again. We really appreciate yung mga comments nyo sa aming comment section. And again, please do not to give your comments down below. Leave your comments down below for our next episode. Kung may questions kayo, we might still be focusing on investments. Yan. So, guys, with the new lockdown imposed by our government due to the rising number of COVID-19 positive cases, it has been taking its toll on our local stock market, which made Mr. Pera and Mrs. Mapera, worried about their investment, which has been declining year to date. So, syempre, like anyone else who has investments, they're worried. Negative territory. Tonight, we will be tapping in-house experts, investment experts, Andre and Francis, so to help us out or at least help out Mr. Pera and Mrs. Mapera. So Andre and Francis, can you give us an update on what is happening with our economy and the state of our equities market?
Okay, so thank you for the question, Kuya. No? First of all, I want to remind or at least enlighten our viewers that the Philippine stock market, or actually the stock market in general, is a leading indicator. It doesn't mean that if the economy goes down, the stock market would also go down. On the contrary, the stock market moves in anticipation, in anticipation of what would happen to the economy. Because GDP numbers and all these other statistical data that you get from news sources or the government sources on the economic growth or economic performance, they do come in like a quarter after, right? Anyway, to give you guys in a context, on what happened or what's the state of the Philippine economy now is that the onset of COVID-19, right, when it arrived, when it spread out of Wuhan and arrived to different places and into the Philippines, it actually really affected our economy. In fact, the GDP numbers in the Philippine economy dropped to its worst level, to its lowest level since World War II. Imagine that, right?
Wow. That's a
The
big
economy
decline.
Yeah.
contracted.
Yeah.
Yeah,
That's
the economy contracted to a level far below, to as bad as the economy, right? And you can understand because of the lockdowns,
mhm,
and you would also see that, or if especially people who've been investing in the stock market would have seen the rapid drop. I mean, before the economy actually felt the lockdowns, the stock market already dropped, right?
mhm,
So yeah, it's important to understand the circumstances and how they're related. Um, there's also the fact that actually cost a lot of people their jobs, unfortunately, right? I think the latest data on this shows that there were at least 4 million Filipinos unemployed, right? Uh, there are already concerns. Where's the next batch of aid? I mean, look at the U.S. How many stimulus packages they've already received? Like what, two, three times by now? But here we've only received once, and uh, just because they've started reopening some parts of the economy and people have started going back to work, doesn't mean that there's already money in their pockets to spend, right? Um, so yeah, it did wipe out a lot of jobs. It did contract the economy. So before the stock market already, re- discounted or already reflected that drop when the lockdowns just started. But if you were trading the stock market, or at least investing in the stock market, and you joined, or you started buying, like what, in the middle of the year, you would think it's weird that your returns or your portfolio is up by a lot when in fact the economy isn't doing well. It's mostly because these two, they're not exactly, they're not they're not exactly in sync, because the stock market moves ahead. And the way I see it, or at least right now, the state of the economy, it's still tough going, right? There's still a lot of challenges, a lot of problems. I think there was a recent unified curfew, and then there was this other, there are other lockdown measures that varies, from different regions. So I think the economy is still in for a struggle. So, and you'd also see that reflected in the recent moves in the stock market. Like whereas last year in the middle to the end of the year we had a bull run, the market was going up. Now it's not exactly reflecting that. Before I take too much time, I should throw the ball to Francis. What about you, Francis? What's your take?
Yes, I agree with you, Andrea. For the last year, we are experiencing some massive drop sa stock market natin. But eventually, it recovered around September to October. Then we managed to ex- uh, achieve some profit within first week or second week of January. But after that, until now, experiencing a somewhat a correction. Uh, the market hasn't managed to create another high since January. So most probably the market is expecting or anticipating another some bad news, I think. But recently, today, uh, 25th of March, we have a high cases of the coronavirus, and this would make the market more in the bearish sentiment, and the monetary and the fiscal actions would need to take place. Then we need to be cautious more sa investing natin, lalo na the fixed income yields and inflation rates are somewhat bit rising. So that would be our next point of discussion, Andre.
Yeah, yeah. I agree. Now, it's a tough environment. Uh,
Yeah.
with the economy dropping, and funny thing is, or actually, it's not really funny. It's in a dark sort of funny, is that the COVID cases on a daily basis are higher than the index, right?
Yes.
The stock index is what, 6,000 something,
Thousands and the
but we're
cases is
logging 8,000.
yeah.
So
Sana nga
yeah,
yung stock index natin same ang ano eh. Same ang amount, ang value
Yeah.
sa number
yeah,
of COVID
That's
19
the
positive
that's
cases.
the inside joke within the trading community that it's getting higher than the actual
index.
market.
Well, I know it seems negative. It seems negative yung sentiments right now.
Yeah.
But the good question that Mr. Pera and Mrs. Mapera will be asking right now is it the right time to invest? So what's your take on that? Francis muna siguro, Andre, if it's okay.
Okay. So my take
Sure.
on that. So my take on that, Brad. We need to recheck the risk profile of our client. That would be Pera and Mapera. So if they're onto more aggressive type of investor, so they're willing to hold for more than 3 to 5 years. So I think this would be the best time to accumulate. Uh, we all know after this downturn or the bears moment in the stock market, there would be another new, sunrise. A new market is emerging, and yeah, that's my key point. That it would be the best time to invest. How about you, Andre?
So those are good points, Francis, since for sure, Pera and Mapera have long-term views on their investment. So it's good that they do invest. It's a good point that you pointed that out. But how about you, Andre? What's your take on this?
Yeah. Unlike Francis, I'm taking a different view. But before I talk about my perspective, I want to to reiterate the fact that I have no idea what uh, Mapera and Pera's portfolio are, right? They're not my clients, so I can't exactly give, uh, you know, very specific advice. But just my point of view as someone who manages other people's money, right? Um, I think right now is not exactly the best time to buy, and if you haven't started buying stocks yet or investing, I don't think it's the right time to buy yet. Uh, because okay, let's put it this way: lockdowns happened in March last year. Uh, it caused panic, right? People immediately, or a lot of people immediately sold their positions because they were scared. They had no idea. There was no existing model. There was no basis, or there was no precedent on the proper action, right? Nobody knows at that time. Nobody knew how long the lockdown would last, or whether the exchange was, or would it be closed for a week, a month, a year. Nobody had any idea at that point. Fortunately, at least they resumed trading. And in that kind of event, it was more like a flash crash of sorts. The stock prices just dropped like really fast, right? If you would look at the chart of the index, you would see a rapid decline in just a few days, right? A span of few days, the market already dropped what, over 2,000 points or more. And you see, when that kind of event happens, that's actually a really good time to buy, right? Well, there's a saying that goes, buy when there's blood running on the streets. When
Mhm,
everybody's panic selling, that's when you should buy. It's a capitulation strategy, right?
mhm,
This time it's different. We know a bit more about the economy, how long these lockdowns take, or what actually happens, and they're not exactly stopping trading. And then you compare that with the rising COVID cases, and you know some issues with how the administration is dealing with the COVID vaccination. There's a lot of issues. There's a lot of different opinions, different voices, and it's starting to show at least a slower, more sustainable decline. And the thing with that sort of thing, a sustainable decline is not a good thing because you'll just be buying and it'll continue to drop and drop and drop. Of course, I could be wrong, right? And that also hinges on how the government or the private sector would help out in speeding up the vaccination. And there's also issues, after all, with a large percentage of the Filipinos, like what, 47%, don't even want to be vaccinated. So it'll
Yeah.
be hard to get herd immunity if majority or if a large portion of the population wouldn't want to get vaccination. So given that, it might be too risky to buy now. There you could start, you could buy at a later date. When there's more clarity on what will happen. But if you have a longer time horizon, like what Francis said earlier, then yeah, it shouldn't matter. Or if your strategy or approach is what we would call the peso cost averaging, where every month, based on your income, you set aside a certain buy. Let's say for example, you're earning 50,000 a month net, and then you allocate 5,000 a
Mhm.
month and buy shares in a fund. That's fine. You can continue as is since you're doing it for a different reason. So yeah, that's my view. It depends, right?
Okay.
So the short answer, it depends on your personal circumstances. I would personally, I wouldn't buy for the long term. I would start trading actively, avoiding riskier issues and just buying stocks that have momentum.
Mhm.
Since I'm too scared or too conservative to hold
Mhm.
on to companies that are dropping. So that's my view.
We talked about equities. Now let's talk about fixed income. So there's a question from Mr. Pera and Mrs. Mapera. What do I do with my bond fund? Kasi my agent told me it's a safe investment kasi ano ko, conservative ako, halimbawa. So, but it dropped by 10%. Medyo, syempre, kung if we will put ourselves in the shoes of Pera and Mapera, you'll be worried kasi you were informed that these are safe financial instruments, they're safe underlying assets because they're bonds. So especially kung government securities yan, di ba? The government has the capability to print money and pay it off. So what would you advise or how would you explain this to Pera and Miss Mapera? Who wants to do it first?
Right. Can
Ma-
I take that,
sure,
Kuya?
Andre. Thank you.
Yeah, can I take that first? Yeah, okay. So, okay, first, I want to clarify some details for Mr. Pera and Mapera. They bought a bond fund, right? The
Yes.
way a bond fund behaves is different from buying a bond, directly buying a bond, because these bond funds actually measure total return. So what do I mean by that? It measures both the yield, right, the income, the interest payments, but
Mm-hmm.
also the price movements of the bond. Yes, you will also experience that as a direct bond investor, when you buy a bond directly. But the difference here is when you are looking at your bond fund, it's more obvious, right? So when interest yields go up, bond prices tend to go down, right?
Mm-hmm.
Especially for existing bonds because they're competing with new bonds. And the thing is, if you're investing in bond funds, you really see that happen. Yeah. So looking at it from a behavioral psychological standpoint, yeah, they would feel scared. But the investments, the assets that are being held inside the fund are actually really good or tend to be very good because the fund managers selecting these bonds um, have already vetted which bonds would go inside the fund, and a good portion of that are also government bonds, which have the backing of the Philippine government, right? And they tend to be very safe. And uh, the way I see it, I think they should just give it more time, um, because the bond funds, when the bonds mature, the fund will get back the capital, the principal, which they can then reinvest, right? And you also have to consider that last year bonds had a really good performance because there was a lot of fear in the market, and central banks worldwide were cutting interest rates, making bonds really attractive, like existing with high yields attractive, pushing their prices up. So if you compare last year's performance and this year, it's kind of unfair because last year was a strong year for bonds. So the way I see it, I would say they should just give it more time. But if they're chasing yields now, if they really want high yield now, they can always reallocate higher yield instruments. Perhaps they could also consider digital banks. Uh, a new one is Tonic, I think. They offer very high interest for their 6 month time deposit. I think it's around what, 6%, I think. So if they are chasing yields, yeah, that can be done, right? They can reallocate, but that would mean that they'd have to realize some losses. So the way I see it, let's look at their asset allocation. Let's look at the time horizon, and if their timeline is or time horizon is long term, they should just wait it out.
Mhm.
So, Andre, I think you've answered everything. So, I might take the next question on that. Back to you, Sarai.
Okay. So maganda yung sinabi ni Andre, no, na there are options na pwede silang mag-redeem ngayon, and then perhaps mag-invest sa higher yield na instrument. But again, it would really depend on the the risk profile of the couple. Tama. But ito, follow-up question lang, Andre. Uh, wouldn't it be better kung halimbawa, instead of them pulling it out, if they're capable of investing pa naman, magdagdag na lang sila? How would
Okay,
that affect their portfolio in the long term?
okay,
Their
okay,
bond portfolio?
okay. First of all, let's visualize or imagine Mapera and Pera's portfolio, right? When they started their relationship with us as their financial consultants, we have a look at their whole situation, right? So we know that they've probably put some money in the bank, put some money in bonds, put some money in stocks, properties, and the like, right? So we have an idea of how they allocated their portfolio.
Mm-hmm.
Uh, Traditional portfolio management theory would just say that, when this sort of event happens, right, bonds go down, this actually changes the asset allocation, right? The weighting of the portfolio.
Mm-hmm.
So all they need to do is just sell or redeem some of the assets that are extra good. Like, let's say they have some crypto, they can unload Bitcoin, perhaps a percentage of Bitcoin or percentage of their uh, real estate investment trusts, or um, you know, and then reallocate the redeemed portion back to the bond fund. So they bring it back to balance. Okay.
Mm, okay.
So that's the traditional way of doing it. So when you say that they should dug or they should add, that also depends on their ongoing income and how they're allocating that money. So they could, instead of allocate this fixed balance, let's say, just for illustration purposes, let's say they allocate 100,000 a month, for example. Just for an example, we know that their income is different, but just to make it simple, 100,000, they're allocating 20,000 to bonds, 40,000 to stocks, 20,000 to real estate investment trust, and the rest into a money market fund. They can just tweak that because the money market fund is mostly stable now. Stocks are dropping, so they could increase the monthly allocation towards bonds and stocks to rebalance the portfolio back to
Mm-hmm.
the original allocation strategy. So yeah, does
Okay.
that answer the question, Kuya?
Yes, yes, very much. So it's all about bringing back the right allocation
Mm,
to where it should be because
yeah,
of the differences in prices of their existing portfolio and
that's right.
assets. Okay. So
Okay.
thank you, Andre, those are good points. For sure, matutulungan yan si Pera and Mapera. So now, given that they can do cut loss or they can consider other things, they can rebalance their portfolio. Aside from, kasi tayong mga Pilipino, syempre sanay tayo local equities, local government securities. Kumbaga, the only thing that we're familiar siguro kung depende kung sino yung kausap natin, di ba? Yung kung ano yung mga available products ng mga local companies or even the multinationals. But uh, are there other options na pwedeng i-consider si Pera and Mapera with regards to their investment? Kung magre-reallocate man sila ng kanilang monthly investment or existing portfolio nila, what else can they consider? Siguro since Andre took the point last time, uh, I'll throw this question first on to Francis.
Okay, so what are the vehicles where or the different investment vehicles that Pera or Mapera should do? So right now we have different from bonds, money market, the equities, also forex, the the safe haven assets also. Yeah, it would really depend on their preferences. During our the data gathering with, let's say, with Mapera and Mapera, we should let them know that this kind of investment for, let's say, foreign exchange, uh, it's a high risk, high reward, and for this equities, high risk and high risk and high reward also. So if we want to achieve certain type of return, let's say double digits or near double digits, so we need to lay out all the cards, and it would be depend from their own preferences and their own risk appetite.
Mhm.
That would be my take
Okay.
on their
Thank
investments.
you for that, Francis. How about you, Andre? What can you recommend to Pera and Mapera?
Okay, so let's lay
Fast.
out the different options they have. Okay, uh, let's start with direct market access. The stuff that you buy directly from the market. We have stocks.
Mhm.
You have to go through a stock market. Uh, there's cryptocurrencies. You can go through different exchanges or peer-to-peer purchasing. So it could be via PDEX. It could be from coins.ph. Uh, for real estate, you could buy real estate directly, or you could buy real estate investment trusts. These are like funds, collective investment schemes. More on that in a bit. They're basically, you know, uh, a pool of assets placed in one security, and then you can buy it from your stockbroker. Yeah, it gives you exposure to real estate without having to buy directly a piece of property. Um,
Mhm.
then there's also the bonds. You can buy it from banks or fixed income brokers, which are mostly banks actually. Retail treasury bonds, corporate bonds, and then as I mentioned earlier, there's these collective investment schemes. These are basically what you would see mutual fund agents selling. Mutual funds are, and then unit investment trust funds. These are distributed by trust companies or via banks. Um, they're basically investing in the same direct assets, but uh, they're more accessible since you can buy them in bite-sized amounts. Uh, what else? Other they can also try out starting their own investments in businesses. Like private equity of sorts. That's also an investment. They can also consider uh, different kinds of assets outside of the Philippines. These would be stocks traded in in different markets. There are good brokers for that. Uh, Interactive brokers would be one because it gives you access to almost all the markets. You could also try Fidelity if you just want to buy US stocks or ETFs. ETFs are like collective investment schemes. They're similar to mutual funds or UITFs, except they're traded on the stock exchange. You're
Mm.
not just buying it from one provider. You can buy it from the market itself. I think I think that pretty much covers all the kinds of options, investment options.
Mhm.
They can get from banks. Can get from stockbrokers if they want direct access. Again, see collective investment schemes. Um, yeah, I think that pretty much covers most of
Okay.
the most of the straightforward assets. Straightforward investments they can buy.
Ang dami palang options, no?
Yeah, there's a
And
lot of options.
Yeah.
and sometimes even in the local stock market, 'di ba? May iba-ibang indices pa 'yan, may mga subsectors that they
Yeah.
can choose from as well. So they could put a theme on it. So anyway, so well, that's how I see it. so given all of those choices and options, so let's go back to local equities or
Okay.
equities. Can pera and mapera do it themselves? Can they invest on their own in the stock market? Which is better? Sila directly ang mamili ng stocks na i-investa nila, or would it be better if they have it managed by someone else, people like you? Or perhaps would a collective investment scheme be a good choice? So what's your take on that? Francis, muna siguro.
Yes. So it depends talaga no on how they are passionate sa financial markets or how they want to accumulate their wealth. So it's hindi naman mahirap magbantay ng stocks as long as you have the plan na you know what's the do's and don'ts in doing the direct trading in the market. And if they have more time to monitor, yes, they can do it themselves then. But if they're so busy, like my anak pa sila, and they have, let's say, 8 to 12, 8 to 10 hours of job and they cannot monitor it, most likely they would go to an collective investment schemes and say like mutual funds or any other available investments, either onshore or offshore.
Okay. Oh, those are good points, Francis. So how about you, Andre?
Okay. Let me take a balanced view. Because you all know that I'm a stockbroker, so I might recommend, you just trade directly. Yeah, because it'll be good for me and my business.
Yeah.
But the balanced view is that you know trading stocks and investing is not exactly the same. Trading is like a different business altogether instead of just buying and holding because trading has a lot of skills and knowledge that you have to accumulate, right? It also has a different way of thinking, a discipline. So some would say it's like a profession on its own, uh, whereas investing is also different. Um, so the way I see it, for the vast multitude of people, they should actually just buy, you know, index funds, low cost, get market returns at low cost. That's already good enough for a lot of people. Even Warren Buffett, one of the world's greatest investors, even said so himself that, I think the average people should just buy index funds. But he also said that he became a better investor because he was a businessman, and he's also a better businessman because he's an investor. So knowing that Mapera and Pera also have background in business, right? Well, Pera has a background in tech, but he might eventually want to start his own startup. Having an understanding of business and being an investor would also yield a different outcome. You're not just getting market returns, you're not just getting returns, but you're also learning how to think about businesses. So there's a benefit there that's beyond just the money, right? Because you get to understand it, things a lot better. You also get to understand how the economy is interrelated with the your specific business, how all these things are interrelated. So it does help you become a better professional, a better business person if you also try to manage it yourself. But of course, that's just you know uh, just a thought. But in reality, as Francis said, you could be busy. You could have you would probably want to spend more time with your kids. So for like I said earlier, the vast multitude of people would benefit from outsourcing it. Just letting someone like me manage it, or buying a collective investment scheme like a mutual fund or a UITF or an ETF. So yeah, I think the person has to really think about it. Do they have the time and the interest to learn this new discipline, this new way of thinking, new approach, or would they just rather outsource it and reap the benefits? So yeah, does
Sit back
that?
and relax, kumbaga,
Yeah,
if
some
that's what
people
they
would.
want.
Yeah, some people would benefit from that. In my
Mhm.
case, I really want to understand this. That's why I'm in it.
Mhm. Okay. So it would really depend on their frame of thought, their perspective at the time that they are going to decide.
Mm.
That's good. Thank you. Thank you for doing that. Kung halimbawa, Andre and Francis, Pera and Mapera diversified into offshore funds. So that are growing. Kasi we mentioned a while ago that the local market is contracting, even the local economy is contracting. But there are some economies and some exchanges that are actually rising up and it's continuing to grow. Uh, what do they do? Do they pull out their investment and take advantage of the lower prices in local equities? Would that be a good decision for them? Or if I were to advise them to do that, would that be a sound recommendation for them to do if I were the financial consultant in this matter? So siguro si Andre naman muna ang mauna ngayon.
Okay, sure. Okay, the right answer here is that we always have to go back to the client's asset allocation, right? When the local market drops and then their global funds do well, there's a disbalance. So they have to bring it back to the original balance, right? That's the right answer. That should be how they do it. They have to bring it back to the right balance so they can stick to their plan and achieve their ultimate objective, right? Which is what we're advising them for, right? And then I think that's the right way to go about it. They should rebalance their portfolio. Um, yeah, that's it.
Okay. How about you, Francis? What's your view on this?
Yes, portfolio rebalancing is very important, uh, not just to diversify the risk, but also the opportunity given in the different markets. So in this case, we need to be more cautious and do a tedious assessment with the client. In this case, Mapera and Pera. But if they want that preference na, oh, I want to have an allocation in the local stock market and trim off some profits from the global funds. Yeah, we can do that. But they need to realign or aligned with their risk profile as always. Because that would be our basis on their investment.
I like where the discussion is heading na we always go back to something important, which is the core value of our practice in RFC, right? So
Right.
uh, it's important that we have, well, we manage their expectations, they stick to their, not really stick, but they always look back to their risk appetite. So, and they have to be guided well. And again, also, we also always go back na ano ba yung importante para sa kanila? 'di ba? So ayan, so eto, last question on this topic. I think we you guys mentioned a bit about defensive stocks, and ano ba ibig sabihin ng defensive stocks, and why should people include that in their equities portfolio? Uh, would it be advisable that their equities portfolio be more concentrated in these defensive stocks? So what's your I need to know your views on this kasi ako hindi naman ako stock market person. Actually medyo I tried it but it's not my cup of tea. Ako yung type ng person na I would rather sit back and relax and let the experts do the trading for me or do the management for me. So ikaw Andre, anong take mo dito sa question na ito?
Okay, let's take a step back and look at the asset allocation side, right? Okay, so there's before I answer defensive stocks, because we're just focusing on one area of a client's portfolio, right? A very narrow area.
Mhm.
If you take a step back and look at the bigger picture, uh, there are this thing called asset allocation. Like, how are you going to, assign or budget the your money into the different kinds of assets or different kinds of, like, whether how much you should put in bonds, how much you should put in stocks, how much should you put in real estate, that sort of stuff. You have to answer this first, right?
Mhm.
Before we talk about it. Because when we talk about these things like defensive stocks or growth stocks or value, I'm sure many of you would have already heard these terms. This is actually referring to just the tactical side. We have to look at the bigger picture first. So before we answer that, let's look at the bigger picture. So how much should the client put their money in stocks? How much should they put in bonds? And this depends on what stage of life they're in, right? For the case of Pera and Mapera, they're concerned about a lot of things. They're concerned about retirement. They're concerned about their daughter's education. So you combine that, they would still need returns. So with that, they'd need to allocate a larger portion of their funds in growing or growth assets so they can achieve their goals.
Mhm.
And um, so now we know, let's say, for example, they put a larger portion in real estate and stocks and maybe a bit on some speculative stuff like crypto or Mapera's business, which they will eventually restart when COVID is over.
Mhm.
Um, Now that we move on to the stocks, right now we can look at the tactics, what you would call tactical asset allocation or timing concerns. At this point, uh, we all know that the economy is not doing very well. Um, COVID cases are rising. So this means that some businesses will not do well, right? Like, who would take an airline, right? Very small percentage of people,
Mhm.
because you're putting a lot of people in a very tight space, which
Mhm.
increases the risk of infection. That's why,
Correct.
airlines are having some trouble. Luxuries, not they're probably not selling as much. So when we say defensive sectors, defensive stocks, these stocks would be the kinds of companies that would do well in downturns or bad economic circumstances like right now. Uh, First, I would give an example, but again, uh, I want a disclaimer to point out a disclaimer that none of these stocks that we will mention are investment or buy recommendations. Okay, it is best that you need to talk with your advisor who knows your personal circumstances and can actually give the appropriate advice. But a defensive stock would be something like Pure Gold. It's a grocery. I'm sure everybody knows what a Pure Gold store is, right? It's a grocery, and it's a defensive stock because prices, we still need to eat, right? Another would be power. We still need power. Even if we're working from home, of course, how are we going to light all of these things? How are we going to do this without power? So these are the companies you'd want a larger allocation or a larger exposure to when the economy is not performing well. because they are defensive. They tend to be able to defend their earnings uh, when there's a market downturn or economic recession and the like. Did I answer the question, Kuya?
Yes, very much, very much. So these are companies whose services are still needed despite being on lockdowns practically, or things like when things like this happen. Okay, how about you, Francis?
Oh yeah, just to add on that. So usually those defensive stocks are those with well-established companies. Yeah, most likely they are into diversified businesses. Though in this case, I may add on to Andre. We can also do in telecommunications. Yeah, right now we are using internet
Oh
for our
yes.
work businesses, uh, communicating our friends. Na kumusta na sila?
Mm-hmm.
So that's one of those. The consumer, that pure gold. Then the energy sector. That's for, let's say, in Manila, that's Morocco, and here as it's FECO, or in Andres location, it's MECO, right?
Yeah.
Yeah. And then
Magkaiba pa pala, no?
yeah,
Although
we have
parehas sa
different.
Cebu.
Mm, though I think they have same owner, I think.
Yeah.
And for
Aboitiz.
Economics, yeah.
yeah,
Aboitiz yan, di ba?
yes,
There's also Vivant, but yeah.
yeah. Then for the telecommunications, we have the PLDT and Globe,
Mm-hmm.
and some they're new telco players. I think that's my point.
Okay, okay. So, uh, it's nice that Andre pointed out that these are not by uh, recommendations. These are just companies
Examples.
being given as examples. But these things can change depending on the situation. So again, guys, you better consult your
Yeah.
advisors before you make these decisions. But they are not recommendations to buy these companies. Okay. So now let's go back to the core of the matter, practice management. How do all of these things affect the financial plan, and how do we help them better, basically? So learning of all of these things, given that pera and mapera are preparing for their future needs, um, how do we put them all together? So it's good that Andre mentioned about asset allocation. So hindi kasi pwedeng konting ripples or parang lubak lang, magbabago na yung direction mo, di ba? So we need to go for this in the long term. So yes, you have some tactical stuff that you need to do kasi if there's an opportunity, you should grab it if there is an opportunity. So uh, how do they move forward from this? Uh, they lost some money in their bond investment. They lost in their local equities, or they're gaining some in their offshore equity investment. So what's the 2 cents worth as financial consultants? Uh, how would you advise them to move forward with their financial objectives? Who wants to do this first? Andre or Francis?
I can go first.
Okay,
So
thank you.
it's best to know what's the client's best interest. No?
Mhm.
Yeah. Once we know their uh, financial goals, then we can provide what are the strategies for them. So we don't know what's the future lies ahead. Like ganito, the pandemic. We didn't
Mhm.
expect na pandemic pala yung 2020, resulting many layoffs and everything.
Mhm.
So once we know their financial goals, we let them manage their expectations. Not all the times parating tumataas yung investments. Kaya need natin yung portfolio rebalancing. And ano lang talaga is more on how they align themselves physically and emotionally on how to achieve those financial goals. So it takes time talaga to reach their goals. Uh, Kaya some clients they want instant change, but we don't do that. We need to go through a tedious process. That's why we do gathering of information from our client.
Mhm.
We don't know what's their current situation or personal circumstances. And once we have that bulk of information, we need to research and analyze what's the best strategies for them.
Mhm.
And that we can present to them and let them decide if they want to implement our recommendation or not.
Okay. Thank you for those points, Francis. How about you, Andre?
Straightforward with this, we should follow a step-by-step process. First, we need to figure out what they want to achieve. In this case, Pera and Mapera are concerned about their retirement, and they're concerned about their daughter's education. And as financial consultants, we actually manage outcomes. We help our clients achieve outcomes. So we want them to, it's our job to help them achieve their dreams and ambitions and goals. So in this case, they want to be able to save up for retirement and fund their daughter's education. So that's the objective. Second, we adjust their portfolio to help them achieve that. Since it's a longer time horizon, their kid is still very young, they're still decades away from retirement, they can afford to take more risk. So their portfolio can be allocated more towards riskier but higher growth assets, right? Um, so there's that. And then on an ongoing basis, we review how we're doing so we can rebalance and to see if they're still on track, right?
Okay.
So that's the rough idea.
Mhm.
Again, figure out what they want, adjust their portfolio uh, to help them achieve that, and then periodic updates to see if they're still on track. So that's
Mhm.
why we need to rebalance. We need to see what's the conditions, what's the market going, all these things.
I guess all of these things are boils down to having a regular review with the clients,
Yeah, that's very
so
important.
that before anything else happens, you can anticipate and do necessary measures so that
Mm.
they won't feel bad about what's going on. So most of the time, just like what happened with Pera and Mapera, kaya siguro sumama ang loob nila or nalungkot sila, hindi sila kagad na abisuhan or na advice nung kanilang service provider na these things might happen,
Yeah,
especially with the pandemic. So it's all about anticipating. So going to that, what should be the posture of their financial consultant when something like this happens again? uh, Siguro inabutan nyo naman yung global financial crisis, di ba? Mga bata pa naman tayong lahat. Lahat tayo inabutan natin yan. So, this is very similar to that. Actually, it's even worse than that. Kasi this is really a global pandemic. It's not just a global financial crisis. It's a global pandemic that caused even a bigger financial crisis than before. So, what should this experience teach financial consultants like us? If this happens again, what should be our posture with our clients? You want to take this first, Andre?
yeah, sure. I really think that financial consultants should stay abreast of the changes in the practice.
Mm-hmm.
This is why it's so important to retool and be able to provide pandemic proof financial planning so you can better anticipate these sort of events in your plan. Funny enough, what, 4 or 5 years ago, I think 6 years by now, even Bill Gates predicted this, that there will be a big pandemic like this. And this is not exactly a black swan event. Black swan events are practically events that nobody can see coming. That's something you can never plan for. But this is something that has happened in the past. Like there was a black plague, remember?
Mm-hmm.
Like
Yeah.
that killed
No,
off.
hindi ko inabutan yun, Andre.
Yeah,
Sorry.
well, yeah. You're probably
Yeah,
too
but
young for that.
we watch it in history
Yeah.
Yeah.
shows
So
and in documentaries.
yeah, and there's globalization. There's population centers like cities are getting more dense. So
Mhm.
pandemics are very likely to happen. Um, especially now, right now, it's not a black swan event. It should have been planned for, but I guess that was not part of the zeitgeist, not part of the thought process of many financial consultants. So I really do advise our peers to look into retooling in such a way that you can actually create pandemic proof plans. And RFC Philippines, the IARFCPH chapter, just does just that. We retool, we do these continuing education, so the advisors will stay abreast of the latest developments and adjustments and tweaks to how we actually practice.
Okay. Thank you so much for that, Andre. How about you, Francis?
Yes. So yeah, continuing education is very important for this one because we don't know what will happen next, right? And we need to keep updated on our core disciplines in financial planning because hindi naman lahat ng mga clients natin is well aware of different disciplines sa financial planning. So in our part as financial consultant, we need to let them aware those different disciplines and help them develop and improve over time. Kaya merong continuing education, the portfolio rebalancing, and checking those different aspect of financials, let's say their emergency buffer, emergency funds, and their insurance. So we need we need to keep updated as financial consultants.
So I guess that's the beauty of being part of an association
Mhm.
uh, of people who are from different disciplines. No? We can share best practices, we can share knowledge and wisdom, and we can also learn from history. Kasi
Yes.
as you mentioned, Andre, these things happened before, only in a different form. So if these things have been building up over the years, then it's bound to happen. So we should learn from history. Although practically history repeats itself naman talaga, di ba?
Yes. Tama.
So which is why napaka-importante ng continuing education. Going back to the cash flow problem of pera and mapera. So despite na although these are pressing and depressing times happening, but they just need to do something about their investment, yes. But it all boils down na if they don't do something about their cash flow and don't do something about their investment, double whammy yun. Di ba? Parang nag-double down sila sa problema. So, it's good that we tackled about yung rebalancing and going back to their portfolio, their strategies, going back to the financial plan, basically. So, kasi aanhin mo yung pera mo kung baon ka rin sa utang at mas lumalaki yung utang mo than your investment. Tapos bumagsak pa yung investment mo at the same time. So, uh, going back to them, reviewing them would give them more confidence on what to do during these depressing times. Bottom line. So, grabe, ang dami nating napag-usapan at natutunan. And thank you so much, Andre and Francis, for, again, being here and taking the charge for helping us with the problem of pera and mapera. So, maganda yung mga pinoint out nyo that they always need to go back to their risk profile. Kasi if there's an opportunity and now is a good time to invest, they should pounce on it if they have the capacity to do so. So they can reallocate their portfolio instead of siguro moving forward with further investment para mabawasan pa yung utang nila. So if there are other assets that could be rebalanced so that they can shave off the risk on that asset, they can do so. So, but again, they always have to do this with the advice and the guidance of their financial consultant. Kasi bottom line, we have to go back to their long-term needs and we need to help them steer their way towards that goal and need. And I like what you said, Andre, about time in the market beats timing the market. Kasi kung too late rin naman yung pagiging tactical mo at you don't know what you're doing, you can actually lose more money, di ba? So if they have long-term needs, even long-term wants, di ba? They have financial objectives that will be 10, 15, 20 years from now. All they have to do is just wait it out. So that's a very good point that you guys gave a while ago. And then it's important that they always go back to their objectives in the financial plan. So bottom line, it's good that they have a financial consultant, which is why the association is here. And then it's also good that you guys pointed out na if you just invest consistently using a cost averaging strategy, you cannot go wrong. And then from time to time, as you draw near or perhaps habang lumalapit yung need nila, then rebalancing or when things like this happen, they should rebalance. Kasi it's very rare that all assets will be down at all at the same time, di ba? So those things are good to consider in times like this so that they won't fall to the trap na matakot sila, i-realize nila yung losses nila. And then, yung going back to their asset allocation, ano ba yung napag-usapan o ano ba yung nabigay na advice ng kanilang financial consultant in the financial plan, it's always to look good to look back on that. Kasi para mawala yung emotion nila sa decision nila. Kasi ito na yung nagawa natin, ito na yung ginawa natin. And sometimes giving into emotion, that's where the problem starts, di ba? So yan. So Andre,
Yeah, thank you for providing a very good and comprehensive summary. Uh, and I appreciate these things. It's like a reminder of all the entire conversations that we've had in this entire episode. And talking about reminders, I would like to remind our dear viewers that feel free to send your questions to our Facebook page or comment down below on anything you want us to specifically cover or certain questions you want answered, so we can talk about it in our next episode.
Thank you, Sir Rai and Sir Andre. Viewers, our time is up again. On behalf of our executive producer, Miss Grace De Vera Escobar, this is the RFC Tuesday podcast saying it is better to be in the know than to be the last to know. Good evening, everyone.
All right, good
Bye.
evening. Bye bye.